Hey guys, in today's video, I'm going to share with you how you can raise your income even in the midst of uncertainty caused by inflation, job uncertainties that you might be experiencing, as well as things like tariffs. And so at the moment, the hot topic in the United States, or one of the hot topics, is tariffs. And you might be wondering, what is a tariff? So a tariff is a duty or levy or fee that a government will charge on companies importing goods into the country. So as an example, let's say Walmart imports different produce like avocados into the United States. The government will then go ahead and add a tariff. They'll raise the duty on those particular items like the avocados, which in turn, when Walmart gets charged, they will pay that money over to the federal government. And so there's a few things that you need to consider when it comes to the tariff. You might be wondering why the government would do this or why the president would do this. So when you charge a tariff, it means more income or revenue coming towards those charged with managing the federal budget of the government. And I believe I read an article where it said that by the mid-2030s, due to the changes in tariffs, the government is expected to receive more than $1 trillion, which they should in turn use for the benefit of the people. But how do companies actually go about factoring these tariffs into their budgets, right? They end up charging you, the end consumer. So all of a sudden, an avocado that might have cost you $1 last week, it might end up costing you $1.20. And so it's just those small incremental increases that's going to actually affect your personal budget. Because if you were living from paycheck to paycheck with the increase in the costs or that the companies are going to charge you, it's going to mean that you're going to have less money available because they are going to raise the costs. I read another article where they indicated that the increase in consumer goods might rise by $930 over the course of the year. And again, if your income just about covered your expenses and you didn't have any wiggle room within your budget, that means you're going to be in a position where you're not going to have enough money to pay for your bills. So let's get to the actual part of this video that I want to give you some hope. And I want to show you that there are certain things that you can actually do in order to raise your income even in the midst of all these uncertainties. The first thing that I want to encourage you guys to do is actually start looking at your subscriptions. And so these could be anything from the TV subscriptions that you've got. It could be your gym membership or anything that's a subscription, Audible, you name it, guys. Go in and look at it and assess whether or not you actually use these subscriptions. A year or two ago, my wife and myself were auditing our bank statements or our credit card statements. And so we discovered that I was paying for ESPN and she was paying for ESPN. And you might wonder, how does this happen? And so what actually ended up happening was I was watching a game, a soccer game one day, football game, and I signed up for ESPN Plus. And then a couple of months later, I'd forgotten that I'd signed up, and my wife signed up too, and we were paying for a couple of months. And while it only cost us probably about $50 in terms of us both paying for this particular subscription, that's $50 that we could have used elsewhere within our budget, or we could actually have taken that cash and we could have invested it and made money off that $50. So go ahead and look at your subscriptions, assess whether or not you truly do use the subscriptions that you're paying for. There might have been a time that you signed up for HBO or you signed up for Paramount, but are you still using it? If not, cancel it and use that money wisely. So that's one way. The other thing that you could consider doing is using generic branded items at the store that you go and you buy your products. So as an example, I used to work for a large manufacturing company which has a global footprint. It's in the United States, in Europe, in South Africa, where I'm originally from. And we made branded products, which is our product, as well as generic products, which we gave to different stores, and they sold it. And this is the interesting part for me. When I saw this, I was shocked, to be honest. I found out that we were using the exact same ingredients in our branded product as well as the generic product. But if you went into the store, the generic product was 20 to 30% cheaper because people placed more value on the branded product. So go ahead and look at what you're buying in your house, whether it's dishwasher, whether it is different products that you use around your house. See if there's a generic brand that the store sells that you actually shop by. And then go ahead and look at the ingredients just to see how similar it is, because you could end up saving, as I said, 20 to 30%. And in the day and age in which we live, that 20 to 30% is a lot of money. So that's the second thing that I would do. The third thing that I would do with the rising cost of food, as we indicated, food's going to the cost of food is going to increase, and so your favorite restaurant, food's going to increase too. So as a result of that, if you're going to continue to eat out all the time, the cost of food in your food bill, or budget rather, in your budget's actually going to rise. And so what I encourage you to do is to start meal prepping. And I know we don't like meal prepping. I don't like meal prepping. I don't like eating the same food all the time. But maybe in this season, it's the best thing that you can do for you and your family. So just look at your eating out budget. I'm not saying don't ever eat out. I'm not saying don't eat or buy meat. But what I am saying is just consider whether or not you can make certain tweaks in your budget or your spending plan, and then go ahead and factor that in, and then save money that way, which you can actually set aside for future costs or bills that does arise. So do that. And this is a big one for me, trust me, because I used to buy ribs at Costco. And 2 years ago, those ribs, it's really good. It used to cost me $14. Today, it costs $25. So what have I done? I've cut it out of my budget. I've cut it out of my spending plan. And as a result of that, I've saved money, and I use those for other things. I use those funds for other things. So consider doing that. And yes, from time to time, I do splurge and I do go in and I buy me the ribs, but I don't buy it every time we visit the store. So consider doing that. And guys, I've got a whole bunch of different strategies that we've implemented in these changing financial times that I want to make available to you or for you. I want to encourage you guys to just go ahead, and this is not the end of the video, but I'll just tell you about this real quick. I've got a link beneath this video to a cash guide that Brittany and myself designed, which will show you practical steps and things that you can do right now to free up extra cash within your existing budget. So this is not changing your existing budget or changing your existing what you can spend on, but it's actually looking at what you do, the why you do it. It's going to have you ask yourself certain questions. There's a little bit of homework that you will actually go and do. But I honestly believe that if you go through the exercises in this free guide that I've got beneath this video, you can actually go ahead and find extra income which you can use to offset the rising costs that we are currently being faced with. And then guys, the final point of this video that I want to encourage you, if you don't have a high yield savings account yet where you are saving your extra income in, and this is not investing because we're not talking about investing, but things like your emergency fund. If you don't have a high yield savings account within which you are actually saving your actual emergency fund and some additional savings, then consider getting one. And then there's going to be a list beneath this video where you can actually find a few high yield savings accounts which we suggest you check out. And you might say, what is high yield savings account? It is a bank or a financial institution that will offer you an interest rate on the money that you're saving with them that's a lot higher than your traditional banks. So here's a little bit of homework for you too. Check your interest rate that your current bank is offering you. If you're with one of the larger banks, it might be 0.001%, 0.003%, and then go to the link beneath this video, and then go check what rates these different banks are offering you, and consider opening up a high yield savings account with one of them, because if you could get 3% today or even 4% today, that's better than the 0.0001% that you might be receiving. And this starts to add up when you've actually got a large sum of money just laying in savings. And so if you've got 10,000 and you're only making 0.001% versus 10,000 making 3% per year, that could be the difference between making a couple of $100 or just money, guys, that you are rightfully entitled to, that you could be using for other bills or even your dreams like traveling and so on. So I'm going to be recording more videos like this with practical tips and things that we actually do personally. I'll take you on my journey as an immigrant to the United States and how I had to learn the financial systems over here. And as I've learned these systems, I've started to grow my wealth, my family's wealth. We've increased our net worth by practical tweaks and things that I've had to learn by moving over as an accountant from South Africa to the United States. So for more videos just like this one, where I'll teach you practical tips that will help you to raise your income, cut costs, and live a generous lifestyle, don't forget to subscribe below.